Hey everybody, Boris BK Forex. Welcome to the weekly technicals for Euro dollar, dollar yen, and pound dollar for July 10th to July 14, 2017. Can dollar follow through after a very, very heavy week of data this week, which ended up on a relatively positive note for the U.S., although I would argue that it was relatively mixed because even though employment data was better than expected, we're still not getting the follow through in wages. The wages were lower than expected, and I think that continues to dog the market as to whether the Fed really has the power to essentially raise rates unencumbered. Still, at this point, the conventional wisdom, pretty much the current bet, is that the Fed is very much on track to raise rates another 25 basis points before the end of the year. And next week, we obviously have, let's take a look at the calendar. The major event next week for the U.S. dollar is going to be the testimony of Janet Yellen, which is going to happen on Wednesday. It's not on the calendar here, but she's testifying in front of Congress both Wednesday and Thursday. There, she's probably very likely going to reaffirm her modestly hawkish stance. The only surprise here from her testimony on Wednesday will be if she actually is more dovish than the market anticipates, because the market at this point, I think, is priced in a hawkish testimony from her. On the other hand, if she sort of hems and haws and suggests that, yes, the consumer in the U.S. remains relatively weak, that could create a little bit of a problem for the dollar. We'll take a look at it on a technicals point of view where I see a lot of resistance going ahead. But for now, I think the big question is just how much more power to the upside does the dollar have after all of this moves that we've had in the market. So looking at just the calendar for the majors next week, we don't really have that much important data. This was the big week of data. We have, German industrial production data. We have, on as far as the majors goes, two big pieces of economic data next week is going to be the inflation data. This is another interesting and actually dollar bearish component, whether the PPI and the CPI next week are going to show any kind of inflationary pressures. Because remember, the big argument in the Fed has been that, yeah, we have economic growth, but virtually no inflation. So that's also could be potential dampening factor on any kind of further dollar rally. And then the most important thing, I think, will be the retail sales number. Retail sales have been woeful in the U.S. economy this year. The consumer has underperformed virtually every single month. As a matter of fact, I looked at the historical numbers, and only 2 months did the numbers beat expectations. And last month, they were actually negative. We had a contraction in retail sales. So very, very important that given this very strong employment data, that we actually have a rebound in retail sales and not a puny one like 10 basis points up. So be watching that very carefully. Those are going to be the key data points on the economic front as we approach next week. The only other major component of interest is going to be UK data. And UK this week, of course, also saw massive economic slowdown at the end of the week, really killed the pound. We've been arguing that UK is in very serious trouble because of Brexit for quite a long time, despite all of this counter hawkish rhetoric from Haldane and McCafferty and all of the hawks in the BOE. There is zero chance that the BOE is going to raise rates. As a matter of fact, if they do raise rates, it'll be suicidal. They're in a very, what's known as a vicious cycle, where they're in a contractionary environment with higher inflationary pressures. This is the worst kind of environment for the central bank to operate in, because if the central bank then raises rates, it essentially ensures cutting off growth. So next week will be very interesting, because the only major UK report really worth watching is going to be the UK employment data coming out on Wednesday. And more importantly, not so much even the employment data, but really, just as in the US, the average weekly earnings. One of the most important things that the market will be focusing on is just how putrid the number is here. Because remember, UK is running very hot inflation around 3%. So 1.9, 1.8 gain in average hourly earnings is actually negative earnings to the UK consumer. UK consumers have been running negative wage gains for 6-7 months. And as a matter of fact, I think savings rate went down to a multi-year low as reported today. So very, very important to see this number. If this number prints above 2 or better, that will be a reprieve for the pound. If we see these numbers, or maybe even worse, it doesn't really matter what the claimant count is. It's really going to be wages that the market will focus on. We could see the cable come back down even further. Let's take a look at the levels, and then we'll take a look at the charts here. So the levels in euro remain relatively the same. Euro looks the most bullish of all the majors, and really, as I'll show you on the charts, looks like it really wants to take that 115 level, irrespective of whatever the U.S. Numbers are doing. Dollar yen, much better this week. Certainly, you have to give respect to the technicals. It's trading quite well, but this 115 is a triple top formation. Very, very tough to resist there. So there's only potentially here maybe 100 points worth of trade to the upside. And cable now capped at 130, 120, very tenuous support. It could really be the relative weakness trade for the week. Let's take a look at the charts here. So here's the euro. You can see still very bullish formation. As long as 1300 holds, still very bullish. Now we break the 1300 to the downside. If we get to around 1270, the whole formation changes. It looks then to be a double top distribution. And at that point, euro becomes sell the rally trade. For now, though, it's still very much buy the dip trade with very much a trade towards the 1500. One of the reasons why the euro is so strong, of course, is because European economy, in some sense, is actually doing better than the U.S. economy. And even though European rates are way behind U.S. rates, they are starting to firm. And in the FX market, it's all about relative value. So the fact that European rates, bunds, for example, as a matter of fact, hit a 1.5-year high on Thursday. Bund yields, excuse me, not bunds, but bund yields. And as yields in Europe rise, that makes the euro that much more attractive. That's why you're seeing the bid here, irrespective of whatever the Fed is talking about on the hawkish side. So euro looks really like it wants to take the 115. And I'm bullish euros. I think it's a buy the dips trade here with potential move here towards the 115 level. Dollar yen looks quite good too. And you have to give respect to the fact that we've had some very strong technical moves here last week. And this week, the big breakout candle got a follow through here. But we are running into massive, massive overhead resistance here. It's really quadruple top resistance coming back off of the beginning of the year. And going to be, I think, very, very hard to overcome unless Yellen gives some uber bullish statement of potentially 50 basis point rate hike into the yield curve. If Yellen does not rule out a rate hike in September, that would be a seminally surprising event that could push us all the way through the 115, and then I would change my story completely. But we need to see 115 taken out for yen to really assume a bullish stance. At this point, I think it's more of a sell into a resist point here with limited amount of upside. And cable, for all the hawkish talk from the BOE, hawks means nothing. Data out of UK is horrible. The only thing that can save UK right now, aside from relatively decent wage gains, which I very much doubt are going to happen, is if we start to see some sort of political accommodation out of the Prime Minister May's office. If they're going to be willing to sacrifice or at least compromise on the idea of free movement within UK for European citizens and full rights of transport, full rights of citizenship, sort of the things that Europeans are insisting, the possibility of soft Brexit could really change the sentiment to the market. If they insist on being hard-headed, sort of if it's, no good deal is better than a bad deal, that attitude will take cable down to 110 eventually. So for now, cable to me is the weakest currency until I see some political moderation out of UK or a hugely surprising change economically. Cable looks like it just wants to go back down to 125. It is the single strongest sell as we're looking on the majors this week. So that's how the week shapes up. Wish you guys the best of luck, the best of trading. Boris, over and out.